Hey everybody, Rachel Mikulev here from Empire Tax Professionals. I'm the CEO of Empire Tax Professionals, and I'm also licensed by the IRS, licensed in 50 states, and I have my own tax and bookkeeping company. So today I want to go over entity selection and what you need to do so you can make sure that you're properly incorporated, you're properly saving the most money in taxes with the specific entity that you decided to choose. There are several different types of entities, and I want you to understand all the kinds of entities that there are because there's so many, and every single entity has its pros and cons. So the first entity is a sole proprietor. The second one is a single member LLC. The third is a multi-member LLC. The fourth is a SCorp, and then the fifth is an SCorp. So every single entity has some protection, doesn't have much protection. Some of them has, better tax advantages, and the others don't have any tax advantages and have a high risk of getting audited. So you want to make sure that you have the protection that you need, and you want to make sure that you are paying the least amount of taxes legally. I'm going to go over the specifics and the details of the entity type so you're able to make a better decision of what entity is the best for you, okay? So the first entity, as I mentioned, is a sole proprietor. The advantage is that you don't really need much record keeping, meaning you don't need to have any payroll, you don't need to file any payroll returns since you're going to be the owner. The disadvantages are that you will be paying higher taxes and you do have a higher risk of getting audited. So sole proprietor may not be the best entity if you're making $50,000, $60,000, $70,000 annually, because you're gonna be reporting all of your income and expenses on your individual return. And it's not, and if you wanna grow and have a really big business, usually sole proprietor is not the best entity. A sole proprietor would make sense if you want to have like a side gig, if you have, a marketing company that you want to keep small, or you have a tutoring company, a babysitting job, or things like that. You may want to keep a sole proprietor because you don't really need much protection and you're not going to be making much money. But if you have intentions of like growing your marketing company or growing your coaching company to $50,000, $60,000, $70,000 annually at least, and I'm referring to gross because then you have a lot more expenses. The more expenses you have, the higher risk you have, especially if you're reporting all your income and expenses on your personal return. So it really, again, depends on how much money you're making. It depends on what industry you're in. A sole proprietor is mainly for like really small companies. The next entity is a single member LLC. The single member LLC does give you protection. So it protects you from getting sued, and it protects you if anybody decides to go after you. They're gonna go after the single member LLC. They won't be going after your personal assets such as your home, your house savings, your car, your personal savings that you may have, and things that you personally achieved. They could only, if anybody decides to sue you, they could only go after your, the single member LLC and the business assets. Now, I'm not an attorney. I am not allowed to give any legal advice, but these are the things that I've heard from other attorneys and the research that I've done. So if you want to know more about the legalities and more about the protection, you may want to speak to an attorney so they can properly advise you what entity makes sense from a legal aspect and what entity makes sense from to make sure that you are 100% protected in your business, okay? Now, remember that a single member LLC or any type of entity that you have does not replace insurance agents. So you still would need liability insurance. You still would need errors and omissions insurance or malpractice insurance. A lot of people think, oh, I have an entity, I'm protected. It doesn't replace, insurances. And you want to make sure that you have the proper insurances. Again, disclaimer, I am not an insurance agent, but you want to make sure and think about what type of insurances you would need so you can be protected, because ultimately the number 2 top goals of every single business owner is, or actually 3, I would say. Number 1 is you want to pay the least amount of taxes, right? That's the number 1 goal of every single business owner. Nobody wants to overpay in taxes. Number 2, You want to make sure that you are 100% protected in your company. You have the proper protections to, make sure that if anybody decides to sue you, you are properly protected. And number 3 is you don't want to get audited. And if you do, you want to make sure, again, that you're protected. You have the proper record keeping, the proper guidelines to make sure that if the IRS or Department of Labor or Department of State asks you for any specific questions, you are able to supply them with any information they need, so they don't say, oh, you don't have backup for this. They're going to reduce your liability because they're actually going to increase your liability because they're not going to allow an expense because you don't have backup for it. And now the business owner gets really stressed. And you're now going back and forth with negotiations with the IRS, which is what you do not want to do. So 3 goals is to make sure you're paying the least amount of taxes, to make sure you're protected, and make sure you have the proper backup. And an accountant and an attorney, of course, with the protection side of things, does really help you with that. The next entity I would say is, partnership and / multi-member LLC. A partnership is like a single member LLC, except a single member LLC is only one member. A partnership or a multi-member LLC is more than one member. So you are still protected. Again, speak to an attorney to let you know what type of protection you have. But it's more than one member, and you automatically file a 1065 return by March 15th of every single year. A lot of people don't know that you need to file separate tax returns. People come to us and they say, oh, I'm a corporation, and they think that they need to file one return, but you need to remember, if you're a corporation, you always need to file 2 returns. If you're a SCorp, if you're an SCorp, if you're a multi-member LLC, you really need to file 2 returns. And you need to know your dates too. So again, partnership is, you do need to file a separate return for partnership. It is a little bit complicated. It does have high tax rates because of self-employment. You pay Social Security, Medicare, 15.3% more in taxes technically. And so a lot of times, you want to make sure you are the proper entity. So earlier today, I'll tell you a really quick story. I spoke to a client and he said he's a multi-member LLC. And I asked him, okay, why are you a multi-member LLC? Did anybody tell you if you should be an SCorp? And he said, no, I just went online and I heard from other people that I should be a multi-member LLC. And I just opened the entity myself. And I said, okay, in your specific situation, you are overpaying in taxes because you're a multi-member LLC. And with him specifically, his returns were supposed to be due March 15th. He has 2 partners and they were not filed. We're in May now. So every single month that you don't file your returns, it's $205 per month per member. So it's $410 that he's going to be paying in penalties for every month moving forward that he didn't file. And his accountant didn't file an extension. He didn't even know that his deadline was March 15th. And now he's coming to us so we can help him. So this is why you want to make sure that you know what type of entity are you? What are you protected? Are you overpaying in taxes because of the entity that you are, etc. 15 years ago, I went to an attorney myself, and that's how I opened my corporation. I went to an attorney up the block for me, and I said, hi, I want to open a corporation. He said, great, perfect. I paid him like $700 back in the day. It was so much money. He gave me a black book and said, good luck, you're in business. Didn't give me any guidance at all. Didn't tell me how I'm protected, nothing. I didn't even know. A year later, I actually did my own research, and I said, I'm a SCorp for 1 year. I'm a SCorp. I'm not even an SCorp. And how could it be? The attorney didn't even sit down with me and tell me the difference between a single member LLC, a sole proprietor, a SCorp, or an SCorp. He didn't even give me, he gave me the forms in the corporate book, which is what most attorneys do, and expect for you to fill it out and send it to the IRS. And most business owners, they're just going to assume that's a form. Did the attorney tell me I need to fill it out? Did the attorney tell me I need to fill it out within 75 days and sign it? Absolutely not. And thank God I was able to do a late election. But the attorney did not give me any advice. He did data entry. That is what he did. And I was so frustrated with that experience that I said, never again. I'm going to go out there and help business owners and let them know what are the pros and cons of every single entity and what you need to do, what return you need to file, what dates you need to file, and what you need to do to make sure that you're paying the least amount of taxes. And a C Corp, you pay double taxation. He did not tell me that I was going to pay double taxation as a C Corp. Again, it was like 5 minutes. Here's your form, and that's it. Have a good day. So back to partnership. You're a multi-member partnership if you file articles of organization, you have more than one member, you file a 1065 at the end of the year, and you file your returns by March 15th every single year. Now, a lot of clients ask us, am I allowed to be on payroll if you're a multi-member LLC? And members and owners, member/owners, are not allowed to be on payroll if you're a multi-member LLC. It is actually illegal for business owners or for members to be on payroll when you're a multi-member LLC. We have so many clients coming to us where they have accountants where they do their returns at the end of the year, right? And then they say, oh, I'm a multi-member LLC. Let me go to a payroll service company and they could just process my payroll. That's okay, right? Yeah. A payroll service company says, you're a company, great. Let's process your payroll. What's your social? What's this? What's that? They don't even ask you the type of entity you are and process payroll immediately. At the end of the year, clients come to us and we're like, oh my God, you're a multi-member LLC. You are not allowed to be on payroll. So we needed to either amend the returns and file go back and amend the returns to remove the owners as on payroll so it could be zero because the software company never advised the client of what they need to do. Guys, be really careful. The number one thing that business owners are really missing is guidance. And if you're going to go to a software company where they're not going to look at your entire picture, they are not going to give you specific advice specifically to your situation. And you want to make sure that you get that. The next entity is C Corp. A C Corp pays 21% a flat tax rate. And C corporations, when you take the money out, you're being double taxed. And a lot of business owners don't want to be C Corps unless you have a very specific reason. Again, every single situation varies. It really depends on your specific situation, your industry, and you may want to speak to an attorney to see what entity makes the most sense for you. But C Corp is usually not common. The next entity is an SCorp, which is really very common when, SCorps are extremely common and it's very popular in the entrepreneurial world. So the tax savings for SCorp is you do save money on taxes and you have a lot less of audit risks. Plus you are able to deduct specific expenses that you are unable to do in other entities. And there are a lot of better tax planning strategies. And we just like it. It's just easier. The disadvantage is that you need to file 2 separate returns. One, the S-Corp is due March 15th, and then the individual return would be due April 15th. But this year it's May 17th. That's fine. So there are additional, documents that you would need to file, and you do need to speak to an accountant to make sure you're compliant. You do need to make sure that you're filing payroll returns every single 3 months, because if you are an S-Corp, you're required to pay yourself a reasonable compensation to the officer. And sometimes the owners don't do that, and it increases the risks of audit. But most of our clients who are S-Corps, depending on what plan they're on, we advise them and say, hey, you're making $1 million or you're making, $100,000 annually. Your payroll should be X amount. So then that really removes them from getting audited. They still could get audited, but at least we do have a backup, and we're really are just proactive and making sure that we're helping them. If they ever get audited, we just have the backup to make sure that they're not going to, reduce or not going to help them overpay in taxes, basically, if the IRS questions them. So choosing the proper entity helps you pay the minimum taxes legally, and it helps you stay protected as long as you have the proper entity. I remember speaking to an Amazon seller making over $1 million a year, and they were not an entity at all. They were a sole proprietor all of this time. We were able to help them save like $20,000 to $23,000 in taxes because we were just able to switch their entity to the right entity. And every single year, depending on what their income is, what their net income is, and what their gross is, but if they even stayed the same, they would save $23K in taxes every single year. And it's crazy that one entity, that one strategy may help you save so much. So you want to make sure that you are the proper entity and you are properly protected. You are saving the most money in taxes and you are doing the right thing. Don't just like Google something and hope that you're doing things the right way, because when you're looking at things like, narrow and at one thing. You're not looking at the entire picture. You're not thinking about IRS, the state, your city, your local. You're not thinking about workers' comp or payroll. You're not thinking about different departments that you need to be compliant with. And when you do, it just becomes really overwhelming. You want to make sure that you speak to a business advisor who understands your specific situation, asks you specific questions based on how much money you're making, based on the industry that you're in, and they're able to help you save the most money in taxes and give you specific guidance on what entity makes the most sense for you. Okay, next. So like I mentioned, 2 weeks ago, we saved one client, $23,000 in taxes. Another client, we saved $15,000 in taxes. And again, last week, we saved another client $10K, and it was like $9,800 or something, close to $10K in taxes just because of this one strategy. Now, I would go back and review and see, are you the right strategy? Are you the right entity? Are you, are you protected properly? Are you paying yourself enough on payroll? These are the questions that you should be asking if you are a business, if you're thinking to become a new business. You want to ask these specific questions because you want to make sure that you're properly set up from the very beginning, from day one of your company. And that's it. If you have any specific questions, let me know what your questions are. I'm always here to help you save and make sure that you're properly educated on specific entity structures. And please make sure that you're properly, you are the proper entity. Make sure you're properly protected and make sure you're saving the most money in taxes every single year. Thank you so much and have a beautiful day, guys. Bye.